Welcome back to Investing Talk Podcast. Today we are setting our sights on a company that's really capturing attention in the space sector, Rocket Lab. And, the big question we keep getting from you, the listener, is pretty straightforward. With all the buzz and, frankly, the volatility, is now a good time to buy Rocket Lab?
Yeah, that's exactly what we're going to tackle. And to really give you a solid perspective, we've broken down our analysis. We'll look at the recent track record, execution.
Right.
What Wall Street's been saying the last few months, then dig into the financials, their competitive position. After that, peek ahead at what's coming up, the potential catalysts in the next quarter or so. And finally, check the chart, see what the technicals are telling us, if the market's actually buying the story.
Makes sense. A full picture. And hey, before we jump in, just a quick reminder. Please subscribe, like the show, leave a comment. We really do appreciate hearing from you. Oh, and definitely drop a ticker symbol in the comments if there's a specific company you want us to analyze in a future session. Okay, let's get into it then. Stage 1, execution. What's been happening recently that's got everyone so bullish on Rocket Lab?
Well, it's been a pretty noticeable shift in how they're viewed. The narrative is changing. Sources we looked at are saying Wall Street increasingly sees them as, and this is a direct quote, a credible public market alternative to SpaceX.
Wow. Okay. That's high praise in this sector.
It really is. And it's not just talk. It stems from their solid launch performance, sure, but also critically the strength of their space systems division. They're not just a taxi service to orbit anymore.
So it's the whole package they're offering now, building the satellite and launching it.
Exactly. They're becoming more of an end-to-end solution provider. And you saw the financial world react to that pretty strongly back in October.
Right, I remember that. Morgan Stanley jumped in.
Yep. Morgan Stanley raised their price target, to $68 on October 13th, and they specifically mentioned high revenue growth expectations.
Okay.
And importantly, seeing a path to positive free cash flow maybe by 2027.
And then Baird followed right after it.
He did. Just 2 days later, Baird initiated coverage, called it an outperform, and slapped a pretty ambitious $83 price target on it.
$83, that's quite a range from where it's been.
It is. But what's really underpinning those targets, and this is key, is the execution. I mean, the company just nailed its 73rd Electron mission flawlessly.
73. That reliability factor must be huge for customers.
It's everything in this industry. You combine that flawless mission with their overall, 94% historical success rate, well, it just builds confidence, People feel like they're buying proven capability, not just hype.
And that track record pays off in contracts, I assume, like that Japanese deal.
Absolutely. That contract with JXA, the Japanese Space Agency, is a perfect example. 2 dedicated launches locked in, one already slated for December 2025.
So that broadens their customer base beyond just, say, the U.S. government.
Precisely. It shows their global reach, their appeal to international partners. It's a huge validation point and adds some much-needed revenue predictability, which investors love to see.
Okay, so execution looks solid. Wall Street's validating it. Let's move to stage 2. The foundations, financials. Growth sounds great, but what's the actual balance sheet situation? Is it strong enough for the long haul?
Yeah, this is where you got to look a bit closer. The top-line growth is definitely there, no question. The sources show revenue jumped something like 78.34% in 2024.
Wow.
Reaching about $436 million. That's explosive growth. But, and it's a significant but, you have to acknowledge they're still burning cash to fuel that growth. They posted net losses around $190 million in 2024.
Nearly $200 million in losses on $440 million revenue. That feels like a lot, especially in a capital-heavy field like space. How do analysts square that? Is it justifiable?
That's the million-dollar question, or rather the $190 million question, right?
Yeah.
And analysts consistently seem to view it as strategic investment. It's not seen as operational inefficiency. It's the cost of scaling up, R&D, especially for the bigger neutron rocket, and building out that higher margin space systems side.
So they're essentially spending now to dominate later, buying market share and capability.
That's the argument. The positive outlook hinges on seeing that $190 million loss as the price tag for building a dominant position and, well, their competitive moat.
Right, the moat. Let's talk about that. What actually makes Rocket Lab stand out? I mean, it feels like everyone's launching rockets these days.
It does feel that way sometimes. But Rocket Lab's moat, it really comes down to vertical integration. That's the key differentiator. You look at their size. Market cap around $32, $33 billion. That's supported by this strategy. They lead in small launch with Electron, sure, but they combine that with designing spacecraft, making components, managing constellations. Think about it. A company only doing launch just gets paid per kilogram, right?
Yeah.
Very competitive.
Yeah, prices seem to be dropping there.
Exactly. But Rocket Lab aims to capture revenue from building the satellite, supplying the parts, and launching it. That integrated model protects their margins more and is really the engine for long-term growth. They're trying to own the supply chain.
Gotcha. So that big valuation, the $32 billion, is the market betting they can successfully pull off both sides.
Yeah.
Scaling space systems and getting Neutron flying.
You nailed it. The market is pricing in that transition from just small launch to being a full-spectrum space infrastructure company. Kind of like maybe the Apple of space systems, if that makes sense.
Okay, interesting analogy. That brings us perfectly to stage 3. Looking ahead. If the whole story rests on future execution, what are the key things investors should be watching for, say, between now and early 2026?
Right, the upcoming catalysts. And the next few months are actually pretty packed on the financial side. You really need to watch these disclosures.
Why is that? Confirmation of those price targets.
Exactly. They'll either support those high targets from Morgan Stanley and Baird or, put them in doubt. First up, you've got the Q3 2025 earnings. That's coming November 6th. Huge report, because it's the first one after those big analyst upgrades. Management's guidance is going to be under a microscope.
Okay, November 6th. Got it. And then there are those market events too, right? Stuff that moves the stock without news from the company itself.
Correct. Things like index or ETF rebalancing, that happens around mid-November the 15th. Funds might have to buy or sell RKLB shares just based on index rules. Creates buying or selling pressure.
Forced liquidity.
Yep. And then, end of November, around the 30th, we get the institutional 13F filings.
That's where we see what the big funds are doing.
Exactly. We find out if the hedge funds, the pension funds, if they're actually putting serious money behind this bullish story we've been talking about. Shows conviction.
That institutional buying is definitely a confidence booster. Okay, so financials are key, but this is space.
What about the actual rockets and satellites? Any big technical milestones rumored?
Oh yeah, these are the potential game changers that could really move the needle, especially towards that 83-Wheeler target. It mostly centers on Neutron, their next-gen rocket. There's a lot of buzz, a lot of anticipation about a potential Neutron rocket major milestone before the end of the year. Could be a test, could be showing off hardware progress. Anything significant there would be big news.
Because that's their step up to compete more directly with SpaceX's Falcon 9.
Precisely. It moves them beyond the small launch niche.
Yes.
Then there are also whispers about a potential strategic partnership or acquisition.
To beef up the satellite side.
Yeah, likely to strengthen those constellation capabilities, bolster that integrated model we talked about, control more pieces. And finally, people are always watching for updates on Electron reusability, making that workhorse rocket reusable.
That would be huge for costs, wouldn't it? Massively. It could dramatically improve their margins on the launch side, making Electron a real cash generator, not just a market leader.
Okay, lots to watch for. Let's hit the final stage then.
Well,
Technicals. Is the stock chart actually confirming all this fundamental optimism and catalyst anticipation?
Well, looking at the charts, the technical picture is pretty positive right now. The stock's definitely in a bullish trend.
Meaning higher highs, higher lows.
Yep, exactly. You see those dips getting bought, pushing the price up over time, tells you buyers are stepping in. Recently, it's been trading in a range, roughly $66.42 up to $72.25. Seems to be consolidating its gains. Key support, sort of the floor where buyers seem strong, is around $65. And the next hurdle, the resistance level it needs to break, is near $73.97.
And based on that, what's the projected range going forward, assuming things go well?
Based on the momentum and the technical patterns, the sources we looked at suggest a likely bullish trading range between, say, $65 on the low end and maybe up to $80 on the high end over the next 3 months.
$80. So the market seems to be pricing in some success on those catalysts we mentioned.
It appears that way, yes. The technicals are aligning with the fundamental story.
And what about the pros, the smart money? Are they buying in?
Generally, yes. Analyst ratings are mostly moderate buy or buy. That consensus price target range is pretty wide, from a cautious $45.62 all the way up to that $83 from Baird. Tells you there's optimism, but maybe some disagreement on the timing or magnitude.
Any insider buying?
The reports mention some buying trends from insiders, which is always a good sign, shows internal confidence. And maybe more importantly, institutional inflows, the big money, are reportedly increasing. The larger funds seem to be building positions. So yeah, Putting it all together, you've got the strong execution, the improving financials, even with the spending, the upcoming potential catalysts, and a positive technical setup. It paints a pretty strong picture. Our overall assessment, based on everything, lands at a bullish rating of 8.5 out of 10.
8.5, that's quite strong.
It reflects that combination of accelerating growth, the positive market momentum, and that cluster of near-term events that could really drive the stock.
Okay, so it sounds like based on the analysis, this could appeal to different types of investors.
I think so, yeah. The material suggests it could work for short-term traders looking to play the volatility around these upcoming catalysts, earnings, neutron news, etc. But it also fits the profile for a long-term investor who believes in that integrated space economy story and is willing to ride out the R&D phase and potential bumps along the way. You need some risk tolerance for that long-term view, though.
Right. Patience required for the long game.
Definitely. And maybe just one final thought to leave you with, tying back to that SpaceX comparison analysts keep making. How critical is the successful, timely execution of the Neutron rocket to actually hitting those higher price targets, like the $83? If Neutron faces major delays, slips into 2027 or later, what does that do to the valuation, to that whole SpaceX alternative narrative, that balance between the speculation around Neutron and the actual delivered results? That's probably the key thing you'll need to track very closely going forward.
Speculation versus execution. A crucial dynamic to watch. Excellent point to end on.